The most recent Australian Company Directors Sentiment Index of the first half of 2024 had some really interesting stats that came out of it. And I guess the one that really jumped out to me was this report was asking a whole bunch of company directors what the biggest issues are out there in the business world right now. So the cost of living pressures has surpassed labour shortages as the number one economic challenge facing Australian businesses right now. And that was really interesting to me because I remember hearing so much about this whole labour shortages is the biggest challenge. We can't get the right people. And that seems to have settled. And interestingly, my daughter is applying for jobs at the moment and getting responses saying over 100 people have applied for this. You didn't get to the next round. And I'm like, wow, that's crazy. I thought there was labour shortages. But seriously, this is impacting, 41% of directors say that the current interest rates are negatively impacting their business and the economy. So in times like these, what it kind of reminds me of is some of the stats we talk about, Nikki, in relation to the success and failure of businesses. Inline Partners in 2020, so it was pre-COVID, but they did a study and they said that 60% of Australian businesses fail in the first 3 years. So I've heard varying numbers of that, varying percentages, but still around anywhere between 50 to 60. And based on their research, 50% of those businesses that failed were profitable. And that kind of shocked me because I went, well, I kind of go, is that a good thing or a bad thing? Because if 50% are profitable, then why are they still failing? And then the flip of that is if 50% aren't profitable, that's massive. So I know that you have shared some stats in the past around that 50% that isn't around profit. So you could run a business that's profitable and still fail. Why would that happen, Nick?
Yeah, it is. I haven't heard that specific stat either, that 50% were profitable. And it is kind of shocking because it's really easy to assume that it's because of cash flow profitability that the business is going to fail. But also what I know is that the research shows that common reasons for business failure is sometimes, of course, profit, but also it's a lack of training or lack of upskilling team members, which when we think about it, makes sense because they have to deliver and keep the wheels in motion. So if they're not performing or up to the job, up to scratch, it's also about a lack of business strategy. So the top three reasons that I've heard and researched is that it's a lack of training and upskilling team members. It's a lack of strategy. So having a plan and executing a strategy in business that continues to innovate and be agile to the current needs and the market needs. And then this is my favorite. I laughed when I first read this, but not in a mean way. It's just so irrelevant. And I know that a lot of people will resonate with this. It's because business owners get stuck in the day-to-day. They get stuck in the day-to-day weeds of the business, which then makes sense that the first couple of points I mentioned are not being met, So business owners get stuck in the day-to-day whirlwind, the busy trap. They're not looking at the areas of the business that need their attention. It's this spiral effect. Therefore, the strategy is overlooked, the investment in people, time, training, etc., is overlooked. So that's kind of the bigger picture around reasons that business fail. And it is really interesting to hear these recent statistics around what the biggest challenges in business are and how that has shifted. And I want to kind of flip it back to you because I'd love to go deeper into looking at, well, okay, we know that there's these other reasons that businesses fail, but we also know that 50% of those businesses are because of profit.
Yeah.
And so I wonder, Ness, if we can take a little bit of a deep dive around this. I know I talk a lot about sales targets and revenue targets, and I will always, of course, they're important. We both agree they're so important. And I also agree they're the vanity numbers in the business. If we're only focusing on that, then, well, that's just not a good look. That's not a good outcome. So let's go deeper on the profit piece. And what's your initial thoughts there around, I'm just going to open floor it, your initial thoughts around this whole, so many businesses are failing because of profit.
Yeah.
Lack of profit.
Well, it's interesting, because we talk about smart growth in business, and some businesses that we work with, what we've seen is the growth has been quite rapid. So some businesses do look at this growth strategy for long-term survival. And so they're focused on the future and wanting to grow quickly. So they start to, that increase in income means an increase in expenses because you're growing your team and all of those kind of factors involved. So that is absolutely hands down something that's critical for the long term. But I think what's missing is the realization that profit is critical for your existence.
Mm.
They go hand in hand, but you cannot have a long-term business success without having the existence of profit to continue to pay for things, because it's beyond looking at just what's on in your bank balance, right? If you're a business owner who bases your success or your level of profit in the business just on how much money's in the bank, that's going to vary depending on the ups and downs of when you get paid, if you're not taking into consideration when all the expenses come out. There's just a lack of planning and preparation for that. And I think
Mm.
that is absolutely the number one thing that we need to be looking at as a business owner is profitability in hand with our growth strategy. Does that make sense?
Yeah, yeah, 100%. Because the growth is all the things that I kind of mentioned before
Mm,
around where we're going, the revenue targets, all the like so much of what we've already talked about on this
mm,
podcast and continue to do. But the profit is almost like it's almost like the like the reason behind it, I suppose. Because
mm.
if we have a profitable business, we can achieve and continue to do all those wonderful things that we've set out for. But we're kidding ourselves if we're not looking at profit and we're only focusing on growth,
Yep.
revenue growth, team growth, personal development growth. All of those
Mm,
growths are amazing, and the profit is the piece that allows that to continue to happen.
absolutely.
Yeah.
Yeah, for sure.
I've heard you talk before around, and you are our resident money coach expert. We're so lucky to be able to tap into your expertise and your knowledge. And I have heard you talk before around that directors of, our listeners, our viewers are
Mhm.
directors of their companies,
Yep.
and we actually have a legal responsibility when it comes to ensuring profit of our business. Can you share a little bit more about what you mean by that?
Yeah, for sure. And this is backing up what you've just said in relation to why profit matters so much. So, the number one responsibility that we have as a director of a company is to ensure that we remain solvent. And solvent means that we can pay our bills. But it's not just about paying our expenses, like all our suppliers. It's the things that aren't sitting in your, to pay list that can catch you out, because solvency is about having enough money to pay your suppliers and to make sure that you can pay your staff. So it's wages, superannuation, excess holiday leave or built up holiday leave, and so on, plus the government. So if it'd be GST, it would be income tax payable. So these are all the things that we've got to have enough money set aside in order to be able to pay all of those expenses to be considered solvent. And so if we have a situation where we might have a really healthy bank account balance this month because we've just got a big payment in, but we haven't looked into the future and worked out what's coming out, we could still be at some point in time insolvent because we haven't got a system in place, or we're not paying enough attention to the figures that matter the most in order for us to know what's going to happen today, tomorrow, and into the future.
Yeah. What do you think stops people from going deeper with understanding these numbers?
From what I see, and hear, it's because we're not accountants. We didn't start a business unless we start an accounting practice. We are creating a business that is all about our sweet spot. It's all about what we do really well. And we're great at what we do. So we get that in order to be able to continue on this growth trajectory, we need to bring staff in. So we need to become a leader, and we need to, be across so much in the business and everything you alluded to, some of the getting stuck in the whirlpool of the day to day. But really being able to come above that and look at figures from, what is the trend telling me? You don't need to be an accountant, but you do need to be able to look at trends around the figures. And there's three really important documents that you need to be across as a business owner, as a director, so that you can make informed decisions about where you're going, and you can be on the ball when it comes to your profit within the business. So I think it's this fear that, or not fear, I mean, like, let's face it, we don't necessarily go into business because we love looking at figures. Case in point, Nick.
Well, you're not a case in point, but
You are.
I love looking at sales figures.
That's
Just different
right.
types, but surface level,
Yeah.
but going deeper. Okay, so it's kind of like this whole thing around we'll navigate towards what we enjoy. Some people will enjoy looking at the deeper
Yeah.
figures and numbers. Other people won't. And I wonder if there's sometimes when we don't see things, there can be this like avoidance of the unknown.
Yeah.
And sometimes it could be feels like it's worse than it actually is, or maybe it might be the other way around. So people don't really want to know what the numbers are showing. But I think, and that's not the case for everybody, but I think regardless, when you know these numbers, you know how to navigate your business. So we talked about, it's so connected to, we talked about lack of strategy in business is also another big reason of business failure. When you know these key numbers and you're looking at these key areas, then you can create a strategy that will legitimately, genuinely set you up for long-term success as well as current day existence. So
Yeah.
can you take us a little bit, like what are the most important things that we
Yeah.
as directors, business owners, CEOs of our company, that we need to look at a
Yeah.
minimum?
We definitely need to be across three different reports within our accounting software. The profit and loss statement gives us a picture of the past. So it says, up until this point in time, we made this much income, we had this much expense, and here's the gross profit amount. So that's really important because we need to make sure that the targets that you were talking about that we set in our business are getting hit, and, that we're reaching the goals that we have set. And a lot of businesses and owners and directors will understand a profit and loss statement. It's pretty clear. Where it starts to get a little bit more complicated from my personal experience and the experience I have with our clients is we've got to look at the current as well. So the balance sheet is the current. And the current is looking at, well, as of a point in time, so today, for example, or the end of last month, what are our current assets? What are our current liabilities? And therefore, once we look at that, what's the equity that we own in the business? And these figures can feel, when you're looking at a report like this for the first time, I don't really know. But I remember being at uni doing economics, and I did a whole presentation on the I line, and I had no idea what that line was. And I was like, I hope nobody asked me whether it stands for income or investment, or because I had no idea. But the I line goes up in this direction. So I felt like that the first time I looked at a balance sheet. It's like, I don't know what I'm looking at. But this is where we tap into the expertise. At this level, you've got an accountant. And sometimes you'll be seeing them on a quarterly basis or half yearly or at least annually, and they'll be going through the figures with you. So it's not that you don't have access to somebody in your world that already understands that. So perhaps asking more questions and getting more guidance from them about how to interpret it is, if you don't understand it yourself, is the best way to go. And that's great. So you've got your past and your current, but you must have future. Future is cash flow planning, cash flow projection. So there's software that does that for you. You can do Excel spreadsheets. The bigger your business grows, the more automated it needs to become. But there must be the ability to look into the future and see what expenses are coming up and to see what income's coming in. So when we look at the three of those reports together, we start to see a trend. And that's as, standing above the business and looking at where it's going, where it's been, where are we now? That's where the big decisions around strategy can come into play, because you're painting a picture. this is where we've been. So therefore, how's that going to predict the future? Or what do we need to shift and change in order to become more profitable, to make sure that we're solvent, all of those things. So I think it's essential that those three reports, statements are something that every director or every business owner is across.
Yep. And then also that links to when you can have a deep understanding of these numbers, you can set, I have to go there, I'm sorry, Ness. You can set revenue targets
Yes.
that are genuinely going to set your business up for success. Because a lot of the times people will just pick a number or they don't take into consideration these sorts of things. Like we can look at, the past year, the past quarter, we can set run rates, we can set targets for the future, but really taking a look at the deeper understanding of what is driving those overarching numbers is so important, because you don't want to get to the end of a financial year or a year or a quarter and be like, yeah, we hit our targets, this is great. Shit, the business isn't profitable. We don't have enough money to be able to pay for all these different things. So it really is so important to have a look at.
Absolutely. And I think, as we sort of drill down a little bit further, again, we're not accountants, but there's some really key numbers you need to be across in your business that impact profit. So one of them is the trade debtors, which is effectively people who owe you money. You want that figure to be down low, like the number of days you're waiting to be paid really needs to be down low, because when that sort of pushes out, your expectation is that you're going to get that payment in this month. And if they're like 60 days instead of 30 days, you're getting it further down the track, which means you haven't got cash flow. And that can impact other areas of your business. So looking at things like an automated system that does reminders, or even to the point if you're in a business that actually has people who don't pay, looking to have external people help you with debt collection. Or there's just lots of different ways it's going to help that. But bringing that figure back is cash in the bank. And that is really, really important. I think you need to be looking at and understanding what the figures are for your liabilities around everything I talked about to do with solvency. So how much GST, have I got that set aside? What's my income tax for the quarter that I'm paying? Is that set aside? Superannuation, we should be, I think it's monthly now, or coming into the future, it'll be paid monthly. Holiday pay, wages, all of that, especially if you've got people who've been there long term, then they start building up long service leave. Sick leave has got to be included in there. All the different access to leave that people accrue, you've got to have enough to cover that. So you need to know that that's there. Ideally separated out into a separate bank account. And then I think the other thing is you want to keep your creditors, so the people we owe money to, you want to keep that down as well, because you don't want to be in a situation where you're a late payer and that person decides that actually it's not worth doing business with you. I don't want to keep supplying you because you're hard to deal with and you're taking up my time and you're costing me money because I have to continuously chase you for the payment. So I would say those three sort of areas that you can find within those reports are going to help you to make some tweaks and changes. And probably the other one that I would suggest is intentional spending. So when you are looking through that profit and loss statement, looking at your expenses, is there something, are there categories in there? Are there things that you have just set and forget that you are paying subscriptions for that you don't need? Could you do a review to see that, maybe you've been working one supplier for a long period of time, what's out in the market? So just really intentional around your spending, and that can be an area that you can really tighten up and make sure that there's more profit, there's more money in your pocket or to your shareholders than there is, sitting there going out to expenses that haven't been reviewed or aren't meaningful or adding value. Does that make sense?
Totally. I mean, investing it back in people as well. Like there's so many better things we could be spending that money on. I love this. So you've essentially shared three key reports, 3 key areas we need to look at. I really, really love the idea of look at the past, the current, and the future. So it gives a very holistic view.
Yeah.
And then also what specific numbers to drill down, in those different areas: trade debtors, liabilities, creditors, and intentional spending. I love it. I might take that into my personal life as well. Need a little bit of that. So Ness, as you know, I feel like this is an interview. What's an actionable action? What do we want our audience to take away? Because there's a bit in that. There's some
Yeah.
obvious actions.
Yes.
What do we want them to do?
Well, this is my soapbox. Money
Yes.
dates. A money date is so important. Um, get into a habit of, I do it twice a month in our business, but others might choose once a month, but a minimum monthly money date where you look at these figures, where you're looking at your profit and loss, your balance sheet, your cash flow at that point in time, and staying on top of it, keeping across it, asking your accountant whatever you need to ask in order to be able to make some decisions. But that money date's got to be in your calendar, and it's got to be a priority meeting in order for you to take the time to look at your finances in your business. And by doing that, you're setting yourself up to be profitable, to be successful, and to be able to fund that longer term growth.
And I think an important point there as well is that you can do it yourself. And I mean, it's not that hard. You just pull a couple of, even I could do it. You pull a couple of reports, but you can also lean on your accountant. So if you're clear on what to ask for, which there's been some clarity today, then, you know, in that monthly meeting, or they can pull those reports for you as well. And you know what numbers to look for. So don't let whatever you're doing now, if you're not doing this consistently, be an excuse. Like I could do it yourself. You can get help, you can get support, and you can always reach out to Ness if you've got any other questions as well, you know, about this piece, because it's fundamental. It is so important to the success of our businesses.
I thought you were going to say it is fun, which I agree with.
Um, yes.
And on that note,
It's fundamentally fun. I mean, anything can be
absolutely.
funny. We go for it. No, I do like looking at the numbers. I do like looking
Me
at these
too.
numbers. So, you know, because we've got to know, we can't bury our head in the sand. And the thing that I always like to look at as well is, what's the story? Find the story in it.
Yep.
So there you
Yep.
go. Find the story. For those of you who don't think numbers are fun, you can make it fun.
You are living testament to that, Nikki.
Living testament to that. Thank you so much to everybody again for joining us this week. We shall see you next week, and we shall see, or you'll hear from us next week, and we hope you have a wonderful day.
Absolutely. See you later.